cloud. All right, here we go. All right. Thank you for joining. Today is Thursday. It's the 9th of December, 6:30 p.m. Thank you for being here tonight. And I'm excited. We haven't done one of these in a while, which is the 3 steps to home ownership. And, we've been focusing a lot this year on different things: financial literacy for adults, financial literacy for kids.
Okay,
And
before you go further, can you make me co-host?
yes, I'll make you co-host. So we've been focusing on how to increase your real estate portfolio. We've been doing a lot of different things like that, all right? How to become a real estate investor, how to turn 1 home into 10 homes. And today we're going back to the basics. And I'm not sure if I pinned you, Claudia, but we're just watching you. Let me see here. You can pin this for now. So right now we're going back to the basics. We're going to learn how to buy your first home and how to buy real estate and how to leverage that. Now, you guys may have some questions as to the process. Stop me anytime, ask me questions. Why? Because this is like second nature. It's like, my first language. I've been doing real estate 19 years, and I could just sometimes just start talking about things and they might seem complicated. So please stop me, ask me any questions that you may have, okay? So we'll start off with that. Number 2, what we're gonna do here is we're gonna first go over the market, which let me pull that up here. And that way we could talk about the market. If you have any questions, by the way, about the market, anything that you want us to cover, feel free to have a chat or even mute yourself and go ahead and ask that question. So let me share my screen here. And here we go. Okay. First, I'll just share with you who I am, that we have an idea of who is giving you this advice, right? Whether it's a rookie or someone with experience. I'm born and raised in San Diego. I've been in real estate for 19 years in real estate. I have 29 tenants paying me rent throughout the county of San Diego. So I have a lot of tenants. I make cash flow every month. I first invested into real estate wholesale deal 2005. I made a nice $35,000 profit investing $0. I'm a full-time real estate broker, commercial and residential, and I'm a property manager. I manage with 16 sales agents. I've given over $100,000 to local community organizations. The biggest deal I've done is $11,100,000 in an apartment complex. Smallest deal, piece of land, $50,000. I've helped hundreds of families throughout the years. At the age of 32, I became a millionaire, and I have a net worth and enough cash flow to allow me to retire. And I've taught a lot of financial literacy to hundreds of youths and adults, ages ranging between 7 years old and 60-year-old. So that's who I am. That's background on me. That way you guys understand that this is what I do for a living. I'm a real estate professional, and I'm really good at what I do. And that's why I'm teaching this stuff. So first, let's talk about the real estate market. Before we get into, hey, how do you buy real estate? Let me give you an idea of where we're at. So end of year expectations. What's going on in today's market? Well, the supply of homes has plunged. So it definitely went down. There aren't a lot of home sellers, what I'm trying to say. And it's normal during this time because it's the holidays. People just kind of want to take their property off the market if they're not very serious about selling. It's normal. Days on market, it's still a hot seller's market. 20 days to sell a home. Anything less than 60 days in San Diego to sell a home is considered a hot seller's market. So at 20 days, it's a hot seller's market. Inventory, the number of homes for sale. Over the last 4 months, we've lost 40% of our inventory. So we only have 1,900 homes in San Diego for sale. So what does that mean? If you're looking to buy a home in San Diego, you have 1,900 homes to choose from. Might sound like a lot, but normally we have about 6,000 homes in a regular market. So right now we're only at 1,900 homes, not a lot of homes. Demand, we're down 3%. Why? Because buyers, again, during this time, they're saying, hey, look I don't want to focus on buying a home. I just want to relax, spend some money during the holidays. And so we lost some buyers, but there's still a lot more buyers than there is homes for sale. Interest rates, all-time low still, right? They were lower earlier this year, but you could still get a loan in the 3% range. Potentially with really good credit, you can still get loans in the 2% range. So here are some averages: FHA 3.5%, VA 3.1%, and conventional 3.4%. Price. This is gonna blow your mind. The average sold price in San Diego is $929,000. $929,000. That's the average. Now, don't let that discourage you, because there is homes for about $600,000 still. There is condos for $300,000 to $400,000 range. This is pretty amazing. There's 11 distressed homeowners in San Diego. What does that mean? That means somebody who cannot pay their mortgage. 11 people in all of San Diego. That's not a lot of people, guys. During the crash, can anyone guess? This is the crash of 2008. Can anyone guess how many distressed homeowners there was in San Diego ballpark? Anybody want to take a crack at it?
10,000?
10,000. Great guess. Who's that? Was
David.
that you, David, guessing that? David? Yeah.
Yeah.
There was between 8,000 to 9,000 distressed homeowners in San Diego during that time. So that's a great guess, 10,000. Just to kind of give you some reference, David, right now there's 1,900 houses for sale total, 1,900. During that time, there were 16,000 homes for sale.
Oh,
16,000. Yeah, that's pretty amazing. So that basically means that there wasn't enough buyers to buy all those 16,000 homes, and that's why prices just dropped and they crashed. So right now there's 1,900 homes only. So let's go into the next thing, new construction. Leading up to the crash of 2008, every year on average, we're building 16,000 new units in San Diego, 16,000 new homes. And there's an oversupply of homes. And that's why a lot of people lost money, lost their homes, lost equity. Last year and this year, we're averaging about 6,000 new homes per year built. The only issue is we're negative 35,000 housing units in all of San Diego County. So we're negative 35,000. So we need 35,000 homes as supply to meet demand. So with almost no inventory, no new construction, almost nobody in trouble because everybody could afford their payment, and interest rates so low, does anyone, I can't see how prices are going to drop. And there's a lot of people that are saying, oh, I'm waiting for prices to drop. The market's going to shift. There's going to be another crash. I don't see it happening. We would need under 6,000 to 8,000 homes to hit the market today for the prices to start dropping. Does that make sense, guys? So,
yes.
Yeah, thank you. So I study this every day. I read articles every day. I listen to podcasts every day. I have conversations with professionals every day. I have really high net worth individual clients that are worth in the hundreds of millions of dollars that own a lot of real estate that I've helped with their real estate purchases and real estate sales. And I have conversations with them all the time about money, about real estate, where they see the market going. And not one of them has told me that they believe that the market's going to drop. As a matter of fact, all of them are still buying real estate, and they're getting bigger properties, more expensive properties, because they feel that the market's going to continue to go up. And just looking at these stats right now, guys, I don't see how anyone can look at these stats and think otherwise. Any questions, comments about the market before we get into the process of buying a home? All right, cool. All right, let's see here. Claudia, I know you didn't look like you're at the office, but I'm gonna pull up the presentation, hopefully here. So let me share my screen one more time. So let me start showing you how to buy a home, okay? First thing is, first step. All right, let me see here. There we go. Step one on home ownership, it's very simple. We need to find the money. There's a question, maybe, let me check. Okay, that's Claudia, never mind. All right, so find the money. How do we find the money, right? How do you purchase real estate? Well, there's a couple of ways. One is cash. The other one is a loan. That's the only two ways, right? Now, you can get a loan, and I'm gonna add one more, actually. Grant, AKA free money. So the first thing, guys, when you go and buy a home is you need to figure out how you're gonna get the money to buy the home. So if a property is worth $800,000, it's like, do you have $800,000 cash? Do you have, if you don't, then you're gonna need a bank loan. How much down payment are you gonna need? You need to find this out, right? So right now, the average down payment that I'm seeing people put down is somewhere around 7%. So what does that mean? There's some people that put down 20%. So what's 20% of 800,000? $160,000. Who usually has 160,000? It's usually somebody selling their condo for 500,000, and then they made some money because they bought it years back, and they get the money from the condo, 160,000. They put a down payment on a home for 800,000. So that's one way to do it. But a lot of buyers right now are buying that $800,000 property with minimal down payment, 5% down. So what's 5% of 800,000 is 40 grand, right? And there's some other people that are buying with FHA, 3.5% down. And then there's VA buyers. VA buyers buy with 0 down. So in essence, they get a free house. The bank gives them $800,000 loan. The VA person that qualifies for it put 0 down, nothing out of pocket, and then they just start making monthly payments on the property. So right here next to loan, I'm gonna put, you could put 0 down, you could put 3% down, 5% down, or more. Now, there's some other programs, grants, free money, right? So right now there's a bank that's giving away $17,500 free money. Okay, that money you never have to repay. So as soon as you buy the property, they'll give you $17,500 towards your down payment and your closing costs, which is really cool, because if you don't have that much money and you don't qualify for VA, then you could get some free assistance and buy a property with almost nothing out of pocket. All right. A grant is something you don't have to repay. And then there's down payment assistance programs. Assistance programs. So in theory, you could put 0 down, but now you're borrowing the down payment as well. And I've helped many people do that, and they buy a home with 0 down. Sometimes they take some money out of their 401k, like $5, $10, $15, $20,000 for closing costs or something like that. But they own a home they have the first loan from the bank and the second loan from like the county of San Diego or the city of Chula Vista or whatever government agency is letting them borrow the down payment. And years later, they come back to me and they go, okay, I'm ready to sell and buy something bigger, right? And then they made money on the first one with zero down. They get that money from the first property and then they buy the second property. So what questions do we have about the first step, which is finding the money? David, Cynthia, I think that's you. Any questions about finding the money or the banks or what requirements, anything like that?
No, no questions right now.
All right, cool.
For me, it would be
Go ahead.
requirements.
Requirements. Awesome. Here we go. Let me share the screen again. And what are the requirements to get a loan? All right, here we go. Requirements are 2 years of income. So if you work at a school, for example, you need to provide the last 2 years tax returns. You need to provide the last 2 W-2s, the last 2 pay stubs. So let me see. So 2 years income, let me do this, proof, okay? Pay stubs, last 2, W-2s, last 2, and tax returns. So they average out those 2 years, guys. So if you made, you know, a lot of money in this year, but last year, the year before in 20, so in 20, to buy in 2021, you would need 2020's tax returns and 2019 tax returns, right? So if you made a lot of money in 2020, then, but in 2019, you really didn't make a lot, they kind of average it together. And then from there, they would tell you how much you would qualify for. So first thing is a job. Let me see here. The second requirement is a FICO score. I would say 580 or higher, right? 580 means you're it's not great credit, but you still get a loan, right? Great credit is considered like 700 or above. So if you have a 580, you could get a loan. If you got a 600, you could get a loan. 620, a loan. 640, a loan. 700, a loan. 800, which is rare, of course you could get a loan. So what's the difference, right? What does it matter if you have a 580 FICO score or a 650 or a 700? What's the difference? Better interest rate. The cost of borrowing money is just cheaper because you're less of a risk to the bank if you have a high credit score. So they say, okay, here, we'll give you this money and we're only going to want 2.75% interest rate. Compared if you have a 600 FICO score, they can say, hey, we'll let you borrow money, not a problem, but instead of a 2.75, you know, we want a 3.5%, right? So you just pay more money to borrow that money. FICO score, credit, okay? All right. And then the other requirement, DTI, debt to income. So you need low debt. So what is debt? Utility bills, that is not debt. Okay, that's just a monthly bill. Car payment, that is debt. Okay, and that's going to affect your purchase. What else is debt? IRS tax liens, child support lien, credit card debt. So let's say you owe $15,000 in credit card debt. It's gonna affect your purchasing power. Okay, so you can still buy if you have a car, child support lien. You can still buy a house, not a problem. But what you'll get qualified for is going to be less, because if your income is this high, right, and then your debt is up here, you're not going to have much room to afford a home. But if your debt is way down here, then there's a large room, large gap, and then you'll be able to qualify. Okay. So going back to your question, David, what do you need? 2 years of income that you could prove. FICO score, that's 580 or above. And then the other one is just low debt or high income, whichever way you want to put it. Really high income, or, más o menos, moderate income, but lower debt. By the way, when you go ahead and you co-sign a car for somebody, or co-sign any type of credit for anyone, all of a sudden that becomes your credit, and it's going to affect you when you go to buy a house. Good question, David. What follow-up questions do you have to that as far as requirements?
For me, it would be, do you need a social, or would the ITIN be?
Good question. I know we were doing loans with ITIN. Claudia, can you text R. Kelly and ask him about that?
Yeah, I'll ask.
Perfect. Thank you. We'll find out for you right now.
Thank you.
If you're, by the way, you could buy if you're a DACA recipient, not a problem. Even if you're a foreign entity. So let's say you're Canadian, you could buy. If you're Mexican, you could buy. You would just need like a bigger down payment. Usually your interest rate is higher, right? But we'll find out about the ITIN or a social. You're welcome. Also, if you're self-employed, you could buy. So if you have your own business or you get paid 1099, you could buy. You just got to claim money on your tax returns if you're a small business owner or something like that.
We just
Cool.
have to find the correct lender, right?
Yeah, any lender really could do it. So this is where I come in very handy and valuable. Is I've done hundreds of deals. I know all the different lenders around town, what they're offering, if they're offering free money, what their FICO score requirements are, right? Because some lenders say, we won't take less than a 640 FICO. Others say, hey, we'll do a 580 FICO. Other lenders are saying, hey, we don't do any DACA. Others say, okay, we'll do DACA. So we know all the different lenders. So usually the next step is, we would talk, find out your situation, then from there point you in the right direction as far as the right lender that could do self-employed or business owners without a problem.
Perfect.
Yes. So to answer your question, there is a TIN number loan, ITIN number. So you're good.
Perfect. Thank you.
You're welcome. All right. It's cool. So first step is find the money. All right. Second one is, by the way, guys, whenever you qualify for a loan, it's not always like you walk into the bank and then next thing you know you have a loan. It doesn't work like that. Usually what happens is for most people, okay, you walk into the bank or you talk to a lender we refer you to, and then from there they look at your situation and they go, hey, okay, look it. You can't qualify yet, but you need to do these things. You need to pay off this credit card. You need to call this creditor because your FICO is down, so you need to get it up by 20 points. And you need to save another $5,000. Right? So usually what happens is they give you a blueprint, they give you some homework, and that blueprint for you to handle or that homework for you to finish, it might take you, let's say, 6 months or 12 months or 18 months, whatever it is. And that's okay, right? Because it's a blueprint, you follow it. Once you're done with it, then that's when you reach back out. And between then and now, you might have some questions. So you reach out and say, hey, I have a question about this. And they would guide you to do that. But once you're ready, 12 months from now, then we go through the home buying process. And that's when we start. And we start the second phase, which is find you the actual home once you're approved. So give me a second here while I pull up this, I want to show you guys this, this presentation, and it's called Lepe. That way you guys know exactly the steps. So this is what kind of where we show you. Let me go into Key. Not a big fan of Key, but I have my MacBook and this should work. Okay, cool. All right, guys. So once you're all qualified, let me share my screen. That's when we start looking, right? So we have a home hunter service for you. So the first things to know about real estate is there's two types of agencies. One agent, real estate agent, represents the seller, and the other one represents the buyer. And the buyer has a fiduciary duty to you. The buyer's agent, sorry, has a fiduciary agency to you, duty to you, meaning they have to put your best interest first. They can't put the seller's best interest, our own best interest, the lender's best interest, or nobody's best interest but yours first, okay? So that's agency law. After you choose your agent, then you go through the steps. So step one is finding the money. By the way, so you guys have an idea of how great it is to get interest rates right now, or loan now. In the 1970s, the average interest rate was 8%. 1980s, 12.7%. 1990s, 8%. 2000 to 2010, 6.29%. And in 2010 to 2020, it's been 3.94% on average. So guess what? You're borrowing money for a lot less than your grandparents did, your tias and mom and dad did, and your older cousins did. Like you're borrowing money for very low right now. So historically, it's a great time to borrow money. This is interest rates are always up, they're always down. There's three different types of lenders, guys. There's a mortgage broker, large direct lender, private direct lender. Things are always shifting. Right now, I'm seeing a lot of brokers just kicking butt because they're getting interest rates super low, right? Large direct lenders, you know, they're good if you're buying your second, third, or fourth home because they have very low interest rates if you're spending a lot of money with them. And then private direct lenders, they're good for certain programs or to close a deal really fast. So everybody has their pros and cons. Here are some of the banks that you see out there, right? These are some of the bigger banks, FDIC insured banks. And some of these bigger banks just don't have the great customer service that maybe a broker or private direct lender might have. When you get a loan, this is the 4 components of your mortgage. You have your principal, your interest, your taxes, and insurance. This is what's included in your 1 monthly payment. So you're not paying a bunch of different people. Cost of financing a home. You have your down payment, you have your interest, the cost of borrowing money, then you have your closing fees. So whenever you buy a home, there's all kinds of services and people that you have to pay. Escrow company, title company, lender fees, real estate fees, notary fees, HOAs. So that's what closing costs are. So whenever someone says closing costs, that just means fees associated with purchasing the home. Any questions on this first part where we talk about financing, fees, costs? Any questions so far on that? All right. Step 2. We email you the properties that match your home buying criteria. So we get together, we take down your exact requirements of a home, and then we start sending you everything on the market. So by dealing with us, we could easily have access and give you access to every single home on the market. So right now I mentioned there's 1,900 homes for sale. By working with a realtor like us, we have access to every single home, whether there are companies or different companies. We all share those listings, and you have access as a client of ours. That's step 2, is the house search. Step 3 is getting you the home. So you want to work with someone who has market knowledge. This is an appreciation chart, okay? This is prices in San Diego over time. Skyrocketed, dropped during the crash, bounced up and down, and now they're on the way up again. So real estate, the cool part is it always goes up historically. It's always going to go up as far as home values, right? That's why we believe in real estate. Inventory, we're negative inventory. All right. Let me see. So here, you know, we work as a team. So you're not just working one person. You know, we cover for each other on our days off, and that's kind of how we work here. The average escrow timeline. This is it. It's about a 30-day period. So what does escrow mean? And by the way, this is the 3rd step. So the first step is finding the money. Step 2 is finding the property. And step 3 is the escrow process, a 30-day process. Very simple. There's a lot of stuff that happens in escrow. So what does escrow really mean? Escrow means that you're in the process of getting title to the property, and takes about 30 days ballpark. So within the first 3 days, you as a buyer, you have to put your deposit into escrow. What's a deposit? Deposit is like a deposit. When you go rent the place, you put your deposit. Once you move out, they give you a deposit back. Same thing. So you put $3,000 deposit to $10,000 deposit, depending on the size of the purchase. And then that holds your place. That gives you access to the property. From there, the seller within 7 days in California gives you disclosures. They tell you what's wrong with the home. If there's any roof leaks, if there's any rowdy neighbors, whatever you need to know. And then within 10 to 17 days, that's the amount of time that you as a buyer have to investigate the property and hire a roofer, a home inspector, a termite guy, an appraiser, whoever you want to look at your home, which will guide you through that, by the way, as your realtors. That's the time that they have to go in there, and then they report back to you, the buyer, and say, hey, David, we found a roof leak and we found issues with the plumbing. And at the point, once we have all the details about the property, we go back and renegotiate with the seller, or if it's not a big deal, we just move forward and close the deal on the 30th day. Now, you do have the opportunity to cancel the deal within this inspection period. So if you don't like the home, for whatever reason, you cancel, you get your money back, okay? Within your contingency period. During that time, you are spending money on inspections, hiring professionals to go out to the property and inspect the property for you. So you're gonna spend ballpark about $1,000 on your inspections. And if you want more inspections, not a problem. You can do as many as you want. You just have to pay those professionals to go out to your home and tell you what's good or bad about the property. And that is the 3rd step. You go through this escrow process. Any questions about this escrow process? All right. No questions about the escrow process. Cool. All right. So now we went over the 3 steps of homeownership, how to get there. We went over the real estate market. So now you absolutely know your numbers. You could go out there and talk to people about real estate. And we're about to wrap this up. I just have a couple more comments to make about real estate. And if you have any questions, by the way, this is the time to ask them, because if you ask anyone, you know, family, friends, co-workers, they're not going to know as much as a professional, and especially as much as myself, someone like myself, okay? So with that being said, let me just wrap this up. Okay, the reason why we do this, guys, the reason why we're here on the Thursday night talking about real estate home ownership is because it's very important to me personally. I've seen it change the lives of many people. It's definitely changed my life. Again, I have 29 tenants around town paying me rent. It's not something that I have to worry about money anymore. And really money, all it is gives you freedom. It gives you the freedom to live a better life. And with home ownership, it hasn't always been like that, especially for communities in need, brown and black people. There have been many laws throughout the years that have prohibited us from getting government financing, from getting loans from banks. And right now, at history, it's the easiest time to get a loan. And guess what? The government and big companies want you guys to buy real estate. And that's why there's so many programs for first-time buyers. And that's why they're making it so easy. And interest rates are so low because the government wants us to purchase homes, because when you buy a home, there's a lot of people that make money. It moves the economy. There's so many benefits to the economy. Now, a lot of underprivileged people or communities, historically, now we have the options to buy homes and to continue stacking homes. I have a client, as an example, he's a plumber. He ended up with 4 homes by the age of 43 or something like that. 30, 40 years ago, he couldn't do that because of all the laws, discrimination, rules, etc. So we met with a client on Saturday, right? He owns 3 homes. I helped him with his first home 12 years ago. Now he's 3, and we wrote out a plan for him to end up with 5 homes. Right now, between those 3 homes, he has $750,000 in equity. What's equity? Equity is the difference between what the property's worth and what he owes on the property. So literally, if he wanted to cash out today, he would cash out $750,000. How much did he put into those properties? The properties that he bought with me, the first 2 were zero down. And then the third one, he got money from one of his other properties to buy the third one. So basically, all 3 properties was $0 out of his pocket. And helping people like that, stories like that, really motivates me to get the word out. I think everybody should own a home. I think everyone should own multiple homes. It's a formula. You don't have to be a genius. You just have to know somebody like us where we could walk you through and teach you step by step, right? And then you start with us next year, and then 5 years from now, by the way, we keep in touch every single year. 5 years from now, you have an option to make another move. Why? Because appreciation, because of equity. Then you make another move, and then over time, we teach you how to gain more and more properties with very little money out of your pocket. So that's why we do this. We like helping people. We want you guys to grow your net worth. We want you guys to grow your real estate portfolio, and we're here to help. So any questions you guys have, feel free to call me, email your favorite Lepe Tendwell real estate agent with whatever questions you have. We're here for you. And any final questions before we wrap this up? All right. Well, have a great night. Thank you for joining us. And by the way, if you want to be part of our mailing list where we update you on future workshops, where we update you with real estate listings and the real estate market, I do all kinds of videos. And if you want to get on that list where you continue to receive this education for free, please DM me right now your information, your name, your email, and your phone number, and then we'll put you on that list. Thanks a lot, guys. Have a good night.
Thank you.
Thank you. Have a good
My
night.
pleasure. All right, thanks, you too. See ya.